Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, October the 31st. It's Halloween. And I hope everybody survived Devil's Night, or All Hell's Night, I think is what it used to be called, where they basically burned down Detroit. I haven't heard anything as of yet, but the markets sure don't seem to be reacting to something like that. Let's talk about a couple of things. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can then implement in your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. We talked about that today being a day where we get some good economic data, not really moving the markets, although it is all pretty decent for the most part. So let's get into it. Housing starts in Japan came in at negative 1.5%, expected to be negative 0.7%, so lower than expected there. And then Japanese consumer confidence waned a little bit, coming in at 43, expected to be 43.5. Don't really talk a whole lot about Japan, but a couple of those points are something to really look at. And then we got German retail sales coming in at 0.1%, expected to be 0.5%, and they revised last month's number down from negative 0.2%, or sorry, negative 0.1% to a negative 0.3%. French preliminary consumer price index in line with expectations at 0.1%. Spanish flash GDP coming in line with expectations at, sorry, my eyes are bad this morning, 0.6%, expected to be 0.6%. And then moving on to the European region for the consumer price index flash estimate, which is their most important number. Remember, we look at ISM for us. And that came in at 2.2% in line with expectations. Core CPI, consumer price index out of the European region on the flash estimates came in at 1.2% in line with expectations. Italian preliminary consumer price index came in unchanged, expected to be 0.2%, and last month's number revised down from negative 0.4% to negative 0.5%. So again, putting that number with the revision into negative territory. Not so great out of Italy. And then European unemployment rate in line with expectations at 0.1%. Here in the United States, we got ADP non-farm payroll, which is a precursor to the non-farm payroll number that we get on Friday, which comes out the first Friday of every month. But this is a little bit of a precursor. I don't hold a lot of credence in this number. It's not always accurate, to be quite honest. And it came in at 227,000 hires, expected to be 188,000 hires. So much better than expected on that front, but they revised last month's number down from 130 to 118. So almost a wash, maybe a little bit better with this headline number. And then we also got Chicago PMI came in at 58.4, expected to be 60. Anything above 50 is expansion in the economy. And then the crude oil inventory numbers came in line with expectations at 3.2 million barrels, expected to be 3.6 million barrels. So crude oil not really doing a whole lot on that economic data point on the crude oil inventories, but we are right at the point of control. We are in line with supply and demand as far as I'm concerned right here at the between the 65 and 70 area. I've talked about that like I'm blue in the face, I think. That being said, if anything, I could see that crude oil would have a little bit of a push to the upside. Not necessarily breaking this bearish pattern here, but definitely push to the upside. All right, gold futures coming off today as equities are starting to move higher. Remember, we talked about gold really getting this bounce based on a flight to safety. When you're worried about your equities, you need to put your money to work somehow, maybe not just in cash because you don't want to lose money to inflation, right? So then you throw it into gold futures, and that has a tendency to make gold push higher. That being said, when equities start to move higher after that, then we start to see weakness in gold as people start allocating money towards equities and putting that money really to work. Bonds, unchanged, maybe down a half a point on the day, but making their way back. this being a key component of what we expect in interest rates. And as I see it with the interest rates, there's not economic data out there really supporting higher interest rates to continue to ratchet this up. We're not seeing that economic push that we really need to ratchet this up quickly. People are already starting to feel the pinch on the interest rate increases on these adjustable rate mortgages. So basically, if you have an adjustable rate mortgage, let's say it's $100,000, if it's increased 1%, that's $100 out of your pocket a month. So now we're talking $200 because we're just over 2%. So from the beginning, when these people were starting these type of programs, they were paying a lot less. Now that money going to interest is getting pulled out of the economy. That's going to slow the overall economy, right? So they are slowing the economy. They don't want to slow it that much, though, to be quite honest. Much more anyway. All right, so that's my soapbox. On to the overall equities. We've got the Dow Jones Industrial Average up quite nicely today, over 300 points on the upside. It isn't the biggest market gainer right now. We have the NASDAQ up almost 2% right now, just over 2.5%. It testing this Fibonacci extension, the 38 Fibonacci extension. I don't really think it's going to break that. I think we're going to kind of settle down here for the next few days, right in and around this point of control. I talked about it yesterday. I think we might bounce back and forth. It might pierce through it a little bit, but I think that this is going to be a comfort area for maybe a week or so, depending on obviously the unemployment data that comes out Friday. All right, S&P is up a percentage point, just slightly over, up 35 odd points, again, right to the point of control. I talked about this time and time again when we saw this market correction that I thought it was going to go there. It might get a little overextended to the downside, and now we come back to it. That's kind of how these levers and pulleys work, and that's why it's really important to look at the daily market commentary, of course, but the market profile is what I was really meaning to get to. All right, you can see overnight inventory is starting to get very long. No attempt to flush those boys out. That's pretty bullish. Although I've talked about going to see very light volumes this week as the European area has a banking holiday starting tomorrow and Friday. I don't think that a lot of positions are going to be put on ahead of that. So I think we could see this market really gyrate back and forth as we did yesterday. Just low volume, moving back and forth. Not a whole lot of directionality right now. Obviously, one, because we have that the bank holiday, two, because we are right there at the point of control where people are going to be comfortable. And try and speed this up because we got a lot to go over today. All right, on to the trades that I've done with FedEx. This was a trade that I put on when I did Adobe, if you remember. I was able to I've tried to get out of this trade before even Adobe. Adobe came in yesterday. I covered that one. Today I got out of the FedEx, and with FedEx, I had on the November that expire on the 16th, I believe it is, and I had sold the 185 puts in there for $1.12, and I was able to buy those back this morning for 38 cents. So nice little profit there. Took off Adobe and FedEx lockstep, played it. Got the move to the upside in both of those. That's what I was looking for. I thought they were just both a little overdone, as I think most equities are a little bit overdone to the downside. Be quite honest, I'm trying to get long some deltas in my overall portfolio. I covered them, got pretty delta neutral. Now I'm starting to add more long deltas. I think that today is a big tell that we're going to get maybe some kind of bounce. Now, on to Facebook. This is also a trade that I did I did 3 trades for earnings, Facebook being one of them. And in Facebook, I did the November that expire on Friday, and I sold the November 132 puts in there for, $1.51, and I covered those for 11 cents this morning. Then on to Yum Brands. Again, I put all these things out on Twitter. Now, I didn't say exactly the strike location because I'm not giving away my rules to everybody else out there in Twitter sphere. But I did tell you guys, and you guys know I'm basically shooting for that 16 delta to sell on either a call or put for earnings. Now, on to Yum Brands. Again, following that same mantra, I went into the November weeklies. and I sold the 81 puts in there for 42 cents, and I was able to buy those back this morning for I can't read my notes, 8 cents. So I sold those for what was that? Yum Brands. I sold those for $1, or sorry, Yum Brands. I sold the 81 puts for 42 cents, and I bought those back for 8 cents this morning. All right, and then EA Sports. EA Sports was another trade I played to the upside for earnings, and I sold those on the November, sold the 84 puts in there as well, or the 80-ish puts in there. And sorry, back to the Yum Brands. Let's go back to the Yum Brands, because I am blind this morning and I can't read my notes. On these Yum Brands, I sold the 81 puts in there for 42 cents. I bought those back for 8 cents. Then in EA Sports, I sold the 84 puts in there for $1.15, and then bought those back for 25 cents this morning. I think that's what my note says. 26 cents, sorry. And then on to eBay. Now remember, eBay last earnings, I sold the 36 puts in there. Obviously, those got put to me. Market has come down and been selling calls. I basically lowered my break even from 36 to 34 by selling calls against that. Now today, or actually yesterday for the earnings, I went in and sold some puts. I was like, I'm going to sell the 26 puts in there. That dollar cost average I've lowered already. That would put my break even right at $30. On that earnings move, we traded all the way up to 29. So that's about where I'm thinking I need to be. So with eBay, I went in and sold the November monthlies and sold the 26 puts in there for originally 70 cents. I bought those back for 8 cents this morning, and then I rolled in to the November monthlies and sold the 27 puts. So a little bit higher, trying to move it a little bit higher, get that dollar cost average. I sold those for 39 cents this morning. So now eBay, I'm long synthetically with the dollar, or with my lowering of my basis down to 34, trying to sell some puts in here right now to dollar cost average with that trade as well, because I'm so bullish. They came out with pretty good earnings. Forgot, I'm out of charts, so I need to start punching these in. So rolled that one, added all of these trades today. Caterpillar to the upside. I went in and sold the December 100 puts in there for 76 cents. Trying to add some long deltas. I think the market's a little bit overdue for a bounce, and we've just a little overdone it to the downside. And believe me, I'll remember that I need to punch this into here. So Caterpillar, Amazon, I also added deltas to the upside, playing this for the bullish. And I did the December 1,340 puts in there. And the reason why I did those 40 puts is because it gets me below basically this value area low. So you can see that's right around the 146. But because I was able to collect $13.10, I did it really small. That puts my break even well below that that value area low there. So that's going to act as a big support if we get down there. So I below that with the credit and everything else. So Amazon playing to the upside as well. Then I'm not going to remember. I'm going to keep clicking on that. Let's use a different chart. Maybe that'll change my process. So then Philip Morris added some deltas here to the downside. Philip Morris, I did the Dees 95 calls in there, sold those for 72 cents. As you can see, got a confirmation of a top here. Maybe it's going to roll over back down to the point of control. And we have no earnings in there. Really high implied volatility on all of these trades. So taking advantage of that. And I will be adding more earnings as they continue to come out. But I want to put some money to work in and around these earnings as well, just because the implied volatility is just through the roof right now. So with Nike and Nike brands, I went to the December as well that expire on the 21st. First, sold the 65 puts in there for 52 cents. So again, the 65 puts little bit below this point of control if it breaks down to that. And then I also have a couple of support areas right in and around here with the credit that I'm going to receive. So all of these trades I've been able to get in good locations where there's some support and resistance. It looks like they're the chart's setting up nicely for some of these, so I couldn't pass up the opportunity as well. So all of those things being said, we ran a little long today, but I had to go over about 8 or 9 different stocks there that I've played around with just today already this morning. All right, so check that out at Pro Trader Strategies. Some of my older webinars, I talk about all these rules in and around earnings. So if you don't know my rules for earnings, go and check that out. Imperative. All my rules are different for the earnings trade. So make sure you know those. All right. Other than that, give me a thumbs up, thumbs down on this video, like or dislike. If you give me a dislike, though, let me know what I'm doing wrong. Also, go to Pro Trader Strategies and check out my next webinar on the long iron butterfly. So I'm going to be doing that tomorrow. If you can't take that, take it easy.